Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, last day of March the 31st, 2015, and this is the daily report for gold and silver. We have a mixed bag in the precious metals markets with platinum just trading phenomenally higher, up about $23. Palladium also up about $7. Gold and silver are trading nominally lower. First to gold, currently we're looking at 1183.81, puts it off roughly $2 on the day, the low 1178, and that is an important number. We'll touch on that in a second. The high 1189.80. Silver also trading lower on the day, current price 1663 and change. It has had a low of 1646. Important numbers to watch in terms of support levels are 1637 and 1611. The high today 1681. We'll touch upon silver in a little bit. So traders, a couple of things I believe are fairly noteworthy as we do look at the markets today and do our analysis. First, let's take a look at overall trading in gold, and what we're finding is although we're down about $2, normal trading is actually in the plus, up about $2.30. Strong dollar though is keeping it at bay. That's taking away about $4.30 of value, and that's where we're getting our net $2 loss on the day. As you know, we are currently flat with no active positions in either gold or silver. We pulled profits on all of our trades on Friday, silver yesterday. We're looking at a daily chart. I have put in one simple fib retracement. The reason for this is as we saw this rally propel the market higher, now that we're in what we'll call a defined correction, the question is, will this correction cease at 81, which is our 50% retracement level, or even go as low as 71, which is a 61% retracement level, and then from there bounce back up? Because in a normal impulse cycle, you would get a series of waves, typically 5, 1, 2, 3, a fourth, and a fifth. However, if we break below this 61% retracement point by any substantial level, then it really tells us that we're simply looking at a counter trend. We've been in a defined bear trend. We got a counter trend rally, and now we'll go back into that. In that case, we'll make a low that is below this current low, call it at 1141. So until we get some sort of confirmation one way or the other in this very, very important level that we're at, we really don't have the proper tools, I believe, to really trigger a buy or a sell signal. Now, what would be the parameters that we would look for to trigger either? Well, there's a couple of things that we would look for. On a bullish scenario, market's gone down. Let's say, for example, that this does become the low here, and then on our following day, meaning on Wednesday's trade, we get a green candle with a higher high, higher low than the previous day, which is this day here. This would then be our star. What we would be looking at would be a variation off of a 3-river morning star, and that would show us that we have really some sort of support in the market, and in all likelihood, we'll go back and test this former level at 1220 and take that out. That would be our bullish model or our bullish scenario. On the bear side, in terms of what we could see, if we see a continuation, let's say tomorrow, what we get is a lower market in which we get a red candle. Let me go ahead and change my color, but a red candle with a lower low and a lower high, something like this, and we break through these levels here, specifically the 61% retracement level at 71, then my senses will continue in this downtrend and probably go to take out this particular low. So we've got a range right now, 1220 on the high, 1141 on the low. We're really in the middle of that area when you consider 50% retracement of that is 81, and we're trading at 83 right in here. So we really need to see how the market reacts in this particular area before I believe we can make a concrete determination as to where this market is going. Now, on a fundamental basis, we've got a dollar, which is again pretty strong. We've got the equities markets really trying to fight itself out of the most recent corrections that it's had. Of course, it is down a little bit today, 2059 on the E-mini, or the Standard & Poor's, I should say, and the VIX is back up. So with all of that in mind, we could in fact see lower pricing. However, anything is possible, as we're all well aware of in this market. For right now, we stay sidelined in the market with no open positions in gold or silver. And speaking about silver, we are looking at a daily chart. This daily chart is in Japanese average format. We have this defined downtrend. Unlike gold, which has had a low which went through the 50% retracement, 50% retracement for silver, and I've put in this fib retracement, which simply covers this entire range of the market, but 50% is 37, and that is below the most current low of the day. Again, this is in Japanese average format. If we convert this to a standard candlestick chart, really to get a better sense or feel for what we're looking at, you'll see it's very, very similar in that we have a very much an unchanged day. We've gotten this defined downtrend. We've had 3 days of lower pricing. And as I said, the basis for a bullish model in silver would be very, very similar to a bullish model in gold. I would look for that same kind of a pattern to emerge, and that would be the variation off of a 3-river morning chart would look something like this. And the other alternative, of course, is going to be if we get follow through selling a Thursday or Wednesday, in which we have a series of candles that have lower highs and lower lows, something like this. And then that would, of course, signify, especially if we broke below 1611, that's our 61% retracement level. And it's fairly much a line in the sand, because once you get too far past this, it's very, very difficult to make any kind of a case for a bull model. So as I said, we're at a real turning point. Currently, we are just above the 38% retracement level, whereas with gold, we're just sitting above the 50% retracement level. So let's see how this all shakes out as the week progresses. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.